financial argument. Follow us on YouTube.
Yeah, let's talk about that a little bit here, Jim. I mean, there's been a lot made already of the big players standing for July delivery in gold. And certainly, with all the chaos following a Brexit, we could be looking at a stampede in gold delivery coming July. I mean, prior to 9 a.m. this morning, some of the primary dealers here in the U.S. are running out of gold bullion coins like gold eagles, gold maples. I mean, we're only hours after Brexit, and there's already been a panic into gold coins. And so what's your take here on the COMEX and the potential for some fireworks in July?
I just read some details about the delivery and the movement from eligible to registered, and it seems like we're in for a very big shortage of available COMEX gold. And usually after first notice, a lot of the players who are long gold, they back down. And I think that they tend to back down from pressure at the COMEX, pressure from the Wall Street banks, but also an expectation that a big pounce is coming. You know, a corrupt paper onslaught sale of just, toilet paper with the words gold written on it. Okay, those are futures contracts. Okay, something's different this time. And what's different is that there's a really unfavorable ratio of available registered gold bars compared to the contracts that are still ready and standing for delivery. Okay, we haven't seen that in a while, and that could be rather big. The other big point that I like to focus on is that China's accumulating silver. And I think it's not just silver. I think they're accumulating zinc. I think they're accumulating aluminum. They're accumulating all kinds of important metals to support their economy, maybe in preparation for an embargo, where the West, led by the United States, seeks yet another sanction to support their wretched financial policies, and China's going to be ready for it with vast stockpiles. They'll say, well, we don't care what you do. You're a bunch of idiots, you're a bunch of corrupt fools, and you rely on war as an economic policy, and it just doesn't work anymore. We've got our stockpile, we're good to go. So when you combine the COMEX with the stockpile issues, I think that we're in some really nice ground. And for those who are disappointed with respect to the Shanghai gold situation, with taking control of the Shanghai gold fix and launching the Shanghai RMB-backed gold contract, delivered in gold bars and priced in RMB. We haven't seen a lot of effect in the gold market, but maybe the Chinese figured, hey, look, we really haven't had a COMEX event. Well, look, we have the upcoming British exit vote. Let's just keep accumulating until these fools in the West just sink on their own platforms and fall into the mud. We can wait them out. Americans never think in terms of, well, the Chinese are just going to wait us out. That's exactly what they do. They might wait us out another year. I don't know. The Chinese are much more patient. They have no problem sitting with their legs crossed for an hour when you couldn't get an American to do that for more than 10 seconds.
Yeah, what do you think it's going to take, Jim, for Americans to wake up? You think they will, short of a complete, full-on collapse?
I think it's going to be a combination of things that might be coordinated together. I think we're going to see in the very near term. I can't put a time on it. I don't really like emails that say, when do you think this is going to happen? I don't know. When do you think it's going to happen? We're going to see in the near term an urgent requirement for the United States to launch its own currency, a domestic-only dollar. We got too much crossfire, interference, confusion, chaos, attacks, and everything that you don't want to see with respect to the international dollar and the domestic usage of the dollar. we're printing money to cover the U.S. government debt. We're printing $1 trillion a year to cover the U.S. government debt. We're printing a tremendous additional amount to cover and redeem impaired and toxic Wall Street bonds. The world doesn't want it anymore, and I think a lot of these problems that you see at the port facilities where ships are not unloading, I believe the story is not properly told. I'm hearing from some Asian clients. I got one in particular from Singapore, and I'm hearing that a number of Asian exporters to the United States don't want treasury bills anymore. And I think that's part of what's going on. You know, I got some clients that were saying, yeah, I talked with an expert friend of mine, and you'd never see a ship leave an Asian port for Los Angeles if it didn't know exactly how it was going to be paid. So your argument about the treasury bills is hokey. And I'd say to them, I don't think so. Maybe they were given other promises, and by the time the 3 weeks pass where the ship lands and docks in the Los Angeles or Long Beach port, maybe the lies are uncovered. So what lies are told during those 3 weeks? And it's a lot more than 3 weeks. It might have been, from the contract signing rather than the ship leaving the Asian port. So I think we're going to see a lot of pressure for the new domestic-only dollar to be launched. And this is a tremendously important issue, because if it's not a legitimate backed dollar, backed by something, it's going to fall in value quickly. And even if it is backed by something legitimate like gold, we have a $500 billion trade deficit at the annual level. Which means that if we don't back it by something legitimate, it's going to go with these 10 and 20% devaluations every couple months, and we're going to start looking like Venezuela in the United States. And if it is backed by something legitimate, we're going to have different problems, because we're going to lose whatever we back the new dollar with. I did a calculation of the strategic oil reserve. Now, just ignoring gold, ignoring other metals that could back a new dollar. I call it the Scheiß dollar, which is German for excrement, shit, flotsam, jetsam, refuse thrown in the backyard. I did a calculation of how much is the strategic petroleum reserve worth, and how does that relate to $500 billion trade deficit? The answer is that we need 71 strategic petroleum reserves to cover a single year of trade deficits for the United States economy. That does not augur well for the future of a domestic-only dollar. It's going to be a crisis, and the U.S. has abused its privilege with this dollar for the last 20 years or more, with all the outsourcing, and the result of outsourcing is bigger trade deficits. If you don't make it in the U.S., you import it to the U.S. There's all this talk for the last 10 years about preserving the U.S. as a consumer for global output. Well, the consequence has been tremendous imbalance and trade deficits. It's over $40 billion a month, and rather steady at that level. That's $500 billion a year. You don't have a backed currency without losing tremendous amounts of the backing from the trade deficit. Americans don't understand what a trade deficit can do to a legitimate forced currency. It means the U.S. is going to be colonized, John. It means the U.S., once it launches its own currency, because of the abuses of QE and a lot of other things related to war and bond fraud and everything, the U.S. is going to be in an urgent situation to resolve and reduce its trade deficit. It's never been important for the U.S. to reduce its trade deficit. It suddenly will. And when that urgency comes, It's going to be a call to the foreign investors. Come one, come all. We prefer Europeans and English speaking, but we'll take Asians too. Buy up some industry, buy up farmland, bring in foreign currency, help us reduce the deficit to the U.S., and start up some new businesses, because we've got a lot of idle workers. We have a 23% unemployment rate. It's not 5. That's the percentage of people who are collecting state unemployment insurance. Clinton made sure that that confusion stuck. The U.S. jobless rate is in the 20%, 22, 23% range. The unemployment insurance rate has been falling, and that's what the nitwit Kenyon in the White House likes to focus on. We got a recovery because the jobless rate is falling. These are stupid arguments. Okay, I think we're going to see a devaluation of the Scheich dollar, the new domestic-only dollar, and the devaluation, John, might be simultaneous with the bail-in event. You asked me what will it take to wake up the Americans? And I think it's going to be losing money in their bank accounts. They've already lost a lot of money at roadside holdups by the police. There were 1,600 roadside seizures of cash in cars in the year 2015 in the U.S. states. 1,600 cases supported by the Patriot Act. If they see their bank accounts are suddenly 30% less, and simultaneously the new Scheich dollar is launched for the U.S. only, and it's devalued by 30%, there's going to be a lot of confusion whether the bail-in did it or the devaluation did it, and that's exactly the kind of confusion our leaders like.
You see this playing out in the financial markets, really the dismantling of the petrodollar, the creation of the gold trade standard. How do you see this playing out in the financial markets?
One thing that is going to happen, and I don't know how soon, I think it's going to be sooner than later, and I don't know what that means. I can't put numbers on it. I think it's in the next several months as opposed to the next few years. We're going to see the QE stopped, halted, ordered cease and desist. QE, quantitative easing, is hypermonetary inflation. It is unsterilized injection of new money with any removal of other funds in the banking system for the express purpose of supporting treasury bonds, but in the back door supporting the impaired and toxic mortgage bonds held by Wall Street. Okay. I have regarded QE for the longest time to be a death warrant for the dollar. You cannot do that because foreign countries have their entire banking systems with their capital being the treasury bills and treasury bonds. They tend to hold treasury bonds longer. They tend to hold treasury bills shorter to make payments for like crude oil shipments. Okay, you cannot print money that is your neighbor's savings account. That's one of the biggest factors forcing the U.S. to make its own currency so the rest of the world can devalue it. So the rest of the world can say, well, if you bring down the dollar by 50%, we'll invest a lot in some new mining firms to bring about some industrial metals output. We'll invest in more solar plants and support the electricity system and reduce the cost of electricity in the U.S. economy. We'll purchase a lot of chemical plants. There will be some legitimate chemicals as opposed to poison chemicals that Monsanto produces and that Halliburton injects into the California water aquifer system. So QE, I think, is going to be taken away. Get back to your question of what will happen in the financial markets. The launch of the new currency is going to force QE out of the picture. No more printing of money, no electronic money injected into the system to support Treasury bonds, the U.S. is going to have to support its own Treasury debt, government debt. And I think they'll do that by confiscating or forced conversion of the $21 to $23 trillion value pension system. So we're going to cover the U.S. government annual deficit by means of confiscated savings within the U.S. economy. There'd be special Treasury bonds. Obama already laid this out with government employee pension systems over a year ago. But the trade deficit is different. We're going to have to encourage foreign investment. But the financial markets are going to react to QE being removed. QE has been told to us as supporting Treasury bonds. But the cat's out of the bag for a long time. They've been buying stocks, supplying money to the Wall Street firms. Wall Street's been buying the stocks as a proxy for the Fed. And a lot of the support for the stock market during this vicious recession of between 4 and 6% recession every year since Lehman. I'm going on record. I've been saying this repeatedly. For the last 7 consecutive years, the U.S. recession has been, for the economy, has been 4 to 6 negative percent. -4 to -6% recession every year. And if you look at the nitwits on Wall Street, they will tell you that when the bonds go down in their yield, for the 10-year, for instance, then the stock market goes up from the Fed valuation model. Oh my gosh, it's such lunacy. We're seeing stock rallies because of the bond rally and not because of an imminent economic recovery. We've got a fascist rule in place that no pundit, no analyst, no government spokesman can mention the U.S. economy without using the terms sluggish recovery. -4 to -6% recession every single year because they lie by at least 6% on the inflation rate. So if they say we have a 1.5% GDP growth, the economy is growing by 1.5%, subtract 6 and you get a 4.5% recession. If they say we have a 2% economic growth, subtract 6 and you get a 4% recession. This is how the benefit of lying on the consumer price index has on the economic growth statistic, which is full of bullshit. Okay, so the financial markets have relied on the Fed and Wall Street support to move up since Lehman. I think they're going to go back to where Lehman level was. What is that? 40% down? That's going to alert a lot of Americans, and many will piss in their pants and discharge excrement in their skivvies. But losing money in their personal bank accounts, that's going to really cause an uproar. That'll wake people up. That'll wake up nitwits like my sister. She never listens to any of my interviews. She hasn't read a single report or public article I've ever read, but she's an expert in my work. Jim, your whole newsletter is about hating America. I said, have you read anything that I've written? No, I don't need to. Okay, that's the level of arrogance in the United States. Arrogant ignorance is what I directly accuse my sister of. You don't know what you're talking about, you claim you do, and you claim no need to educate yourself. That is a big problem in the United States. And when the only time she's ever called me alarmed, ever called me within a condition of her being alarmed, was post-Lehman when her stock market investments went down for her 401k. And now she says to me, like a year ago, Jim, I don't see any real need to do anything different. The stocks are doing great. My 401k is doing great. I said, well, what about all the factors to change that? He said, well, I don't know about that. I think everything will be fine. They're not going to be fine. And when she hits a bail-in and loses $40,000 in her precious savings account that's not invested, she's going to say, wait a minute, I cry foul. And I'm going to tell her, wait a minute, I told you so. It's a shame, sis. You never saw fit to read a word that I've written. I just checked my brother. He paid me a visit last June down here in Costa Rica, and we had some fun. But he confirmed to me what a nitwit he was. I mean, he's a big, Jim, I'm a big Obama supporter. He's from my district. I said, I don't care. He's a fascist and a communist, both. Oh, that's silly. Okay, we got into arguments, and he raised his voice. I raised my voice. But I walked away after that 5-day visit realizing my brother's an idiot. And that's just something I have to live with. He's an idiot. He's got a Phi Beta Kappa economics and political science degree, but he doesn't know what fascism is, and he really doesn't know what economic recession's all about, doesn't know what Obamacare is all about, doesn't know the economic impact of that. I'd like to see Obamacare studied in economics curricula in U.S. universities for its tremendously negative influence. But, my brother's got some preconceived notions, and he told me, Jim, I got a big savings account in J.P. Morgan and Citibank. And I said, well, why'd you do that? He said, well, they're big and they're safer. I said, well, don't you read anything that I write? He said, no, not really, but, why don't you remind me again what the login username is so I'll check out your hat-trick letter. And he did in June, the week after he left. And every few months I check, because I can, on the user authorization file, the database, when did my brother last look at any hat-trick letter? In other words, when did he use the login last? And there it is, back in June of 2015. He hasn't opened it up in a year. I'll take a look at it, Jim, because I realize you do good work. Yeah, right. No, he will react, John, when his savings account at J.P. Morgan and Citigroup are removed to the tune of about 30%. And
Yeah, I mean, from history and human nature, that's what the majority of the people do. I mean, just look at the original bail-in in Cyprus, and I mean, anyone seeing the signs saw it coming weeks before. Anyone reading any real news saw it coming weeks before. But the Cypriots woke up, and everybody was startled awake about 30 minutes after they found out that they couldn't get anything out of their ATMs, and they were bailed in. That's when everyone suddenly had a glass of water splashed in their face, and suddenly they had clarity.
Yeah. I sent my brother, this was about, I think, a month ago, some client of mine sent me a picture of a JP Morgan ATM machine. And on the screen it said, sorry, but your funds are not available. I sent that to my brother, and no comment. I don't know whether it's stupidity or don't want to examine difficult things or just hoping for the best. Oh gosh, U.S. My brother actually told me in 2005 when I started the newsletter, Jim, the U.S. always pulls out of it. I said, well, not this time. And he said, why not, Jim? And I said, John, you're the one with the economics degree. I just have a PhD in statistics. Why are you so stupid in economics? He said, what do you mean? I said, we outsourced our industry from 1985 on. What part of this don't you understand? When we lower the interest rates, we encourage financial speculation and not capital formation. He said, oh, well, yeah, well, there's that. I mean, gosh, I deal with stupidity all the time, John. And when it's in my own family, what I do, and this is something I did since 2010 and did not tell my brother, was that after 2010, in my own heart, in my own mind, I divorced my family. I don't care what my brother does. I don't care what my sister does. I don't care what my father does. they're all going to be big losers. I can't convince them. I tried. I alienated them. I get a lot of emails saying, Jim, you sound like you're dealing with your family in the same brother and sister, father, same way I'm dealing with my sister. I got a friend in Liechtenstein, an American. He said, Jim, it's just like my two brothers. I can't get through to them. I said, well, don't try. Don't try anymore. Just leave them alone. Let them lose. Don't worry about them. Develop new people that you care about and wish to support and convince. Give up on them.
Well, before we wrap the show here, Jim, any last warnings over the next week for the listeners? And then if you could let the listeners know where to find your excellent work at the Hat Trick Letter.
Let me just read to you a message that arrived a mere 14 minutes ago from Euroraj. I sent him an email an hour ago before we got going. A client wrote to me and said Elizabeth Hurley, the model and actress from Britain, went out and advocated a leave vote. She advocated that the British vote to leave. And part of the promotion for Elizabeth Hurley was that she was naked with the Union Jack in her front on a placard. And she's an extraordinarily beautiful woman who I think is probably close to 50 right now. But I'm looking at her now. You see her naked shoulders, arms, and legs, and her whole torso is covered by what appears to be a placard or a large pillow of the Union Jack. And my client said, Jim, I truly believe Liz Hurley helped to turn the Brexit vote toward leave. And I wouldn't be at all surprised if that were the case. But here's what Euroraj said. And he said, Jim, as Austin Powers would say, and remember Elizabeth Hurley was the star in the first Austin Powers movie. He said, Jim, as Austin Powers would say, shagadelic, man. Shagadelic. Yeah, baby, yeah. Okay, those are some of my final words. And he also said, Jim, take a look at the UK sovereign and bank debt downgrades. They're coming soon. Gold is just warming up. It's not even entered the stadium yet. So, in other words, we're going to see some UK government gilts, the bonds, get downgraded. We're going to see British banks downgraded, and we're going to see gold continue up. He's regarding 1300 here as just the beginning.
Right. Well, Jim Willie, the editor of the Hat Trick Letter, found on goldenjackass.com. Jim, we really appreciate your analysis and thoughts the morning after Brexit.
Well, it's a pleasure being on. I hope people go to goldenjackass.com and look at the free material and sign up for the Hat Trick Letter. I don't get too many people writing me saying it's not quite what I expected. I did get some clowns saying, yeah, I thought there would be a whole lot more leverage short plays that I could do. And I said, no, that's not what this is about. This is about paradigm shift and the dollar death, the end of the petrodollar, the launch of the new gold standard, and all that. And if that's not interesting to you, then see you later. Okay, so it's goldenjackass.com, and thanks for having me on, John. It's always a pleasure, and these are very interesting times, but they're also very dangerous times. People need to be very careful about what happens to their life savings.
Couldn't agree more, Jim. Couldn't agree more. All right, so for the Doc and Jim Willie, the editor of the Hat Trick Letter, found on goldenjackass.com, thanks for tuning in to a special edition of the SD Weekly Metals and Markets.